Yes, man. What is going on? My name is Gerald Peters, and welcome back to the channel. Always remember, whatever you think about comes about, and whatever you focus on, that's what grows in your life, man. Welcome to the Money Flow Sunday service. My only goal here is to give you a little bit of an overview of the money flow trading strategy and system, and hopefully build your faith in the stock market. Because listen to me, if you ain't got no faith, you ain't got no fucking hope, man. That's just the way it is. You got to have courage and you got to have faith. That is the only way you will survive in the stock market. And that's why your parents and your grandparents and the people around you haven't done it. Either one, they refuse to learn. Two, they're simply just scared because they don't know, and they've got no faith and they got no courage. We can overcome that, and that's the point of the Sunday service, is to get you to understand that. And what I'm going to try to explain to you is that prices move in 4 stages. Let's pull this back up. Then what I'm going to try to express and hopefully get you to understand. Oh, I already pulled that up, didn't I? Hopefully what I'm going to get you to understand is this thing here that we call the stock market has been around for a very long time. Most of you know that. Where's my and that this is not some sort of secret. It's not secret information. You didn't have to go to Harvard. You don't need to consult people. If you can drive a car, if you can pay your own mortgage, if you have half a brain, if you can just simply pull your head out of your ass and get some courage and take responsibility for your own life and for your own money. Now, there's an entire industry and group of people, and they're going to try to pitch it to you like they're trying to help you. And they're going to be like, hey, go work all your life. Do all these complicated things. Go do all this shit in life. But don't worry about your money. And if times get tough, man, don't even look. Don't even look. Just keep doing what you're doing because you're too stupid to manage your own money. And a lot of people line up to agree with that, man. They don't even resist. They don't mind being called dumb money. They don't mind that strangers, they don't even know, in a foreign land or over in Washington, those people right there, right? There's this, they're sucking it from you through your 401k all the way to Wall Street, man. And they're fucking you in the process because you don't even know what's happening or what the fee's for, who's running it. It's all a giant mystery. And it's sent and given to you in a form of, oh, we're going to protect you. We're going to protect you. We're going to protect the little dumb money because they can't read a chart. This is a chart right here of the Dow Jones Industrial Average as represented by the DIA, which stands for the diamond. We call a nickname as the diamonds. It's the Spider Dow Jones Industrial Average ETF, not to be confused with an ETN. That's an electronically traded note. Make sure you understand the difference between these two. A lot of you guys out there trading, and you don't know the difference between that. That makes you a dipshit. You have to learn the difference between an ETF, an ETN, an MLP, a mutual fund, right? There's all, what else? There's business development funds. There's REITs. These all have different tax treatments. Now you might say, oh man, it sounds so confusing. I know, they got 7 football teams. How could we ever learn about the game? Now, when I say it like that, hopefully you realize how fucking dumb that is. Dow Jones Industrial is made up of 30 stocks, okay? 30 stocks make up the Dow Jones Industrial. I thought I'd pulled up a cool page here. Charles Dow is where we get Dow. There's a guy named Dow and a guy named Jones, and he put out a newsletter much like I do. But instead of creating what we call the wind in the money flow, if you go over to the petersreport.com and go to the back, in the front, I do a synopsis. I hope you do too. I hope you're doing your homework and you're preparing for the week ahead, all right, for the coming week. But if you click on over, there's my trade log on page 4. Right here is the whiteboard. I don't have this week's. I'll publish it sometime tonight. But here's the from 121.20, and this is my playbook. And over here, I have what's called the wind. Now, think about it. If you're in a boat and the wind is blowing and you're in a sailboat, you're kind of going to go with the wind, okay? And if you're trying to go against the wind, it's going to be tough. So in my newsletter, I rank the wind. Well, one of them, number one, is what Dow Jones made his living on, and he's the guy that created, where's all my stuff? Come on, man. He created, there it is, the Dow Jones Industrial Average. Originally, it was just a few stocks, but this was in 1896, long before your mama and your daddy got together in a backseat to have you. On this day, when he started it, they only had 12 companies, and it was mostly railroads. I have some books back there. Dow Jones created this transportation concept that wherever transportation went, so went the stock market. Now, things have changed a little bit since Dow Jones Day. We no longer have 12 stocks. We have 30 stocks. And the 30 stocks that make up the Dow Jones currently are 3M, American Express, Amgen, and put out some Apple, Boeing, Caterpillar, Cisco, Coca-Cola, Disney, Dow, Goldman Sachs, Home Depot, Honeywell, IBM, Intel, Johnson & Johnson, JP Morgan, McDonald's, Merck, Microsoft, Nike, P&G, which is Procter & Gamble, Salesforce, Travelers, United Health, Verizon, Visa, Walgreens, and Walmart. Now, these are, you can buy all of these with a single click inside of the DIA, much like the S&P. And with one click, you own a piece or a fractional share of all 30 companies. And this is just the general flow of the stock market right here. This is a monthly chart. Each one of these bars represent 1 month on this chart. Now, this is a lot of months. So look, back here's 2023. It looks like it goes up. Now let's go back to what's over here, 2022. We're up from there, but then we went down, right? Remember this giant scare here? 1 month, 2 months, 3 months, 4 months, 5 months, 6 months. So, the growth stocks are falling. And everyone sold off right here. Dude, we lost about half the people in our Discord. Why? They didn't listen to Sunday service. They didn't get the have faith part. They didn't get the courage part, because under fire, when their courage and their faith was put to the test, they surrendered. They gave up. They buckled. That's what happens. You got to protect yourself. It's easy to be in this game when it's going up. It's not that easy when it's going down. Now, look at this big sell-off over here. This was the COVID crash. Look at this. Oh, it'll never recover. It'll never come back. See this big sell-off? How will it ever come back? Look how far we've come since then. Oh, let's go back to this one. Remember this one back in 2015? Oh, let's go back to this one and this one. All the way back to 1896. Get off my lawn. And all the way up, the people were scared. All the way up, the people were frightened. Whatever shall we do? Look at this. Let me find it. Look at some of these events that happened. 1870, depression and railroad strikes. Today, not a big deal. Back then, there were no Ubers, there were no cars, there were none of that shit. Railroads were transportation. Had some silver outbreaks in the Boer War, the rich man's panic, the 1929 crash, the Depression, World War II, World War I, emphysema, the Sherman Act, Panic of 1907, heightened cold Columbia, Cuban Missile Crisis, inflationary bear market, Vietnam, Watergate, Black Monday. Look, it just goes on and on with one shitty day, city month after another, okay? I know a lot of you guys think the world might end and you're all into conspiracy theories and Big Pharma did this and oil did that. But you know what? Hey, little unicorn, the world's been fucked and falling apart long before you got here. And there ain't shit you're going to do about it. Either get on board the train and make some money, or be in the have no courage and no faith and be broke and blame other people. Man, that's your only two choices. Now we're going to get into what this here is, and I'm going to start talking to you about the money flow and the 4 stages of price movement. This is at the core of what it means to be in the money flow. And this is how I'm able to survive. But number one, if I don't believe that the market will be here tomorrow and every fucking morrow after this, if you don't believe that, I believe you have no chance whatsoever. You really have no chance to survive this. All right, mate. Thanks for bearing with me there. What the money flow and what Sunday service is about, it's not about stock tickers. Don't post your tickers. It's about this here, the Money Flow Trading Society. We're a group of like-minded people. And hopefully that if I can get you to trust the market, if I can get you to have faith in the market, one of the ways I try to do this is through my other teachings of trying to get the buckets right. What I saw, I've been through 2 of these now, 3 count the COVID. I could keep that one was so fast. It's like it kind of drops from your memory. What was one of the biggest buying opportunities probably in your lifetime? Most people fucked it out. But yet some people didn't. And I've met plenty of young men and women who were coming of age just the right time. They got some money, whatever reason, they didn't lose their job. Maybe they worked. I have a young man that I mentor and do some work with one-on-ones and all this stuff, help trade it. He was a nurse making lots of extra income during that time, and he hadn't been in the market. And he was able to come in heavy and work overtime and just buy up all these stocks that other people had lost courage, lost faith in, had sold. And he was able to buy Bitcoin and, Airbnb and Uber and all that stuff cheap, man. He was able to pick up dividend stocks and MLPs. And in a very short window of time, because he had, made a decision. 10 pillars of success. Pillar number 1, how you think is everything. Always be positive. Think success, not failure. Be aware of negative environments and negative people. Guys, I'm never bearish. Even when the stock market sells off and does this right here, what we call a stage 4 decline, I only see that as opportunity. When price volatility means moving up and down. And if you trade with me, one of the indicators we use is the relative strength index. This measures price volatility, and that just means in a short period of time, it's taken an average. And if price moves faster than the average, what it knows is that price is much like a rubber band. It will move and then pull back, okay? We see this on price. This chart here doesn't matter what it is. What I want to show you right here where my cursor is going around in a circle, we call this a stage 1. And we'll talk about this. And don't overthink this. Let me show you something. Let's say you got a little kid and I said, okay, bro, draw from up there to down here. Okay. And then from down here to up there. Okay. And then from there down to here. Okay. Right. And then from there to there. All right, little man, you got it? Yep. I could probably walk away. right? And he would be like, oh, what about this one? And I say, well, if that one doesn't break that one, just stick with that one. Bam! If that one don't break that one, just stick with this one. You see how simple I made that? Now, some people might say, well, yeah, this is a measured move or an ABC, or this is a cycle inside of Elliott waves. Man, these people get crazy, man. They'll be like, this is a 1, 2, 3, 4, and a 6 of 5 click, and this is a 50%, whatever Fibonacci pullback with a Gann fan. Man, it goes on and fucking on. And what the money flow does is say, hey, is it going up or is it going down? And if you have clear rules to determine up or down, it's only doing one of three, up, down, or sideways. That is all it can do. And so children are easier to teach. I'm going to be honest. And what I began to do is just try to draw little lines, man. I'd be like, hey, little Johnny, when you see where a bunch of them connect, and if you look at it, it almost makes a box, bro. You see that? Now, you only need 4 bars to make a box, okay? 1, 2, 3, 4. Except we want them to go linear. And the boxes with the bars will bounce. You'll see them bounce down, bounce up, bounce down, bounce up. And if you do, don't be crazy with it, but just kind of draw your boxes. If you see any boxes, Johnny, draw those. If you see a bottom and you see a top, connect those, man, with that line I was showing you. And that becomes just a very simple way. And what is this? This is just the natural movement of price. See, I don't have any idea where price is going. I really don't. I don't know. I may act like sometimes I know. I may talk shit and it's all ego. Well, I think this is going to go down to 33,000 because that's where the 200-day moving average is, and that's where it stopped once before. And blah, 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 blah. We talk like we know. You don't fucking know anything. Neither do I. It might. And it does it enough that we can call that a pattern, right? And so what we begin to see, what the market begins to do, and what we as technical analysts, that's what this is. This is chart reading, by the way. Sometimes they'll say, well, Warren Buffett doesn't read charts, Gerald. Bullshit. Of course, he looks at charts. He may not say it. He probably just says what I just said. He don't give a fuck about your Fibonacci ratio and your 1, 2, 3 and your triads and your triangles. He ain't looking at that. He's just looking at the chart, okay? And he's like, the price is down. And then he goes and he researches and he goes, what's the fundamental value of this company? And if they say, well, the fundamental value is $50. And he's looking and he goes, wow, it's trading at 32. Why? See, as an investor, as a trader, an investor is just a trader that takes longer to execute. All right. As a trader investor, if you're not first an investigator, if you're not curious, if you don't wonder things, if you don't, see the world and be like, and see that, then, you're not going to do very well. Okay. This is not a game where you can be self-absorbed, worrying about your own fucking problems in your own world. You have to be looking about the problems of the world. Money comes from other people. Other people have your money. All of the money you want is in the pockets, purses, wallets, checkbooks, credit cards of other people. Other people. These charts are about other fucking people. All right. You may not ride Uber. That don't mean you can't learn about Uber. That don't mean you can't read about how many other people ride in Uber. Remember, other people have your money. But if you're so fucking worried about you can't get outside of you to look, study, observe others, other people. What I mean is, what are they doing? What do they spend their money on? What kind of apps do they have on their phone? So if you're like, I don't give a fuck about people. I don't got time with people. I'm not focused on other people. Well, I don't know how you're going to make money because other people have your money. and it's not just charts, dude. Behind these charts are people. This is human emotion. What moves the stock market? Where are we at? Hold on. Listen, what moves the stock market, guys, is fear and greed on a day-to-day basis. If you drop down to a 1-hour chart, or maybe even, I day trade too. So you drop to a 1-minute chart. Fundamentals ain't got nothing to do with that. And yet they do. As they get brought up, as they get mentioned, the market is like a drama queen. It over-exaggerates everything. When something's good, they just run it too high. It's fucking ridiculous. And when things are bad, they take it way too far. And that pendulum, that swing, I don't know if you have my ebook, How to Be 10 Foot Tall and Bulletproof. It's only $27, man. Stop being fucking cheap and order it. You need it, man. You need a little alpha code. You need to understand the abyss of money. You need to be taller, man. You need to have faith in this market. You should have bought more Bitcoin, but you didn't. Oh, I don't know. You see what I'm saying? You need some courage, man. You need to get 10 foot tall and bulletproof, man. But don't forget, other people have your money, man. This is Airbnb. And you're like, oh, I don't use Airbnb. Well, other people do. And so you go look, man. And what the charts are going to do, the chart, this is the flow movement. This is a 1 day bar. Look at Friday. Just look at this bar. Okay? I mean, if you're like 9 years old and I said, hey, little man, look at this from the high to the bottom, okay? That tick to the left, that's where it opened. So at 8:30 when the market opened, the first order was right there, $141.72. The highest one is the very high of the candle, which was what? $150 and whatever. And it closed on the right tick. Look how much you just learned. And if you look at where it opened and where it closed, look how far apart those are. Now go back to this day. Tiny, 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 tiny. Where's another bar like this? I'm going to say right here. In December. It's been 60 days. And what after this bar? What happened? Come on, man. I'm not asking you to be on CSI or go to Yale. This bar looks a lot like this bar. What happened after this bar? It went up. What about over here? There's one of them right there. Look at this big bar over here. What happened? It went up. Now, what else happened? It went over that green line. Anything goes over the green line is bullish, and that means it's going up. Now, you might say, well, blah, blah, blah. Well, that's just shit you made up. See, because the market isn't going to digest and do everything logically. It's greedy, and then it's fearful. And there's these little moments in between where it pauses. And that's what these bars are, where it gets a little undecided. Like maybe we went too far down. Maybe that problem's not as bad as we were thinking. Maybe we've sold this off so much that we've caused algorithmic computers to begin to short it because of the selling pressure, which causes more selling pressure, which triggers more stop losses, which causes the price to go way further than the original sellers intended. And if they'd known it had gone that far, they'd probably come back in and start buying it. And you get this yang fucking yang every day in the stock market of fear and greed, undecision. People don't know. They don't know what to do, man. And there's all these people that think they know. And we can begin to look at this stuff, man. And we can look for patterns, you know. And that's kind of what the money flow is. And not everything is one thing. Look, there's a doji reversal. There's a doji reversal. Where was the other one I saw? This one is sort of one. There's one right here. Let's see. There's one right here. Shortly thereafter, you notice it turns, but it's not perfect, right? But what happens when we lay that over this concept of a stage 4 decline? And what happens if we believe, you know what, stocks sell off? Cool. That's my opportunity. Volatility. Stage 4 is my friend. I want them to come down. If stocks come down, I can accumulate more shares because I've got little baby money. And baby money takes time. Time times amount times yield, right? Making sure we're still back on here. Time times amount times yield, okay? We know that's our formula. So in other words, we know we need time to compound, to collect dividends. We need time so that we can get amount in. And the more time and the more amount have, the more in the yield department we get. And so this time in these down moves, so if you go back over here, watch. You know, if you needed that down move, right? Right? And then you needed this down move. You needed those, or this doesn't set up, man. And now look at this. Look at where all these are. It's how support and resistance is created. That's how supply and demand zones are created. This organic building of price. And but in and of itself, that isn't a thing. No more than a doji is a thing, or price breaking above the green line is a thing, or the come together of the 5-day exponential and 10-day. These are other technical indicators that we use as technical analysis. That's people who analyze price movement on charts. That's what we do in the Money Flow Trading Society. It's what I do. And then we combine it with financial research, people who went to college, people who have degrees and went to Wharton and Yale and business schools. And for a small sum, they'll sell you their research. And so they study CVS and Walgreens and Rite Aid, and maybe they study oil stocks, or maybe they have an expertise, and we can use our brains and we can purchase that information. We can have subscriptions that give us, and you say, well, they're not always right. I know. Neither is the doji. Neither is the 20-day moving average. Neither is you get what I'm saying? But as we combine all these things together, we get a cohesive formula. What I call the money flow trading system is I lay these 6 component parts from technical analysis, fundamental analysis and research, and I look for stocks undervalued, right? That are setting up on a stage 1, and I'm looking for stocks that maybe are overvalued that I own, or trades that I got in that ran up and now they're pushing fair value or overvalue. And then I can I can use the stage 3 distribution zone, where I begin to sell into that, and as others sell into that, it creates what? Resistance. And so this just becomes this natural flow of price, man. Nothing to fear. Nothing to stress about. If you're stressing, it's because you're doing something else, and then you're trying to rush this. Okay, this isn't stressful. Stock market's not stressful. It's because you don't know what the fuck you're doing usually, and you're thinking about something else, and then you try to cram this into a very short period of time and become an expert at something that you haven't spent the time or deserve to be one yet. So that takes a little bit of time, man. Hold on just a second. It's the wrong one.
It could be something beyond where they were. They were willing to put their time, their energies to better themselves. What you really could do with more skills, it's just remarkable. So I would like to just tell you a couple of short stories, and we'll draw maybe a couple of lessons from them. I would like to tell you of 2 women that each sold a business to Berkshire Hathaway.
Now, what you'll see about Warren, I like listening to him. Warren's not really a trader, but he is an investor. And you can take that fundamental knowledge. We need fundamental knowledge. We need to know how companies work. We need to be able to walk into a business, and I don't need to know how to run the cash register to know if that cash register is fucking effective or not. It's like, why is it taking you guys so long to get money from me? We're in the digital fucking world. I can send fucking crypto to somebody on top of Mount Everest right now by the time I get through your coffee line. That's crazy, okay? If I can send money to someone on Mount Everest faster than I can get through this damn coffee line, you are behind on technology. And so as you scan this place, you can be like, you begin to spot all the problems. Like, look at this, look at that, look over here. What is that? That's seeing business. Okay. I'm not standing in line worried about my fucking problems. I'm not standing in line listening to some dumb music. I'm scanning. Well, when you do that over and over and over, man, it begins to build these traits, these things, and you'll spot things, man. And that's how people spot areas. Money's about serving problems. So instead of bitching about the problems, observe the problems. And every time you hit one or see one or think of one, go, what would I do? If I had the money and I own this, what would I do? And you'll be constantly in the state of solving problems. And problems, other people have problems. So then we back this up, and it's through the service. Am I still on here? Yeah. Through the service of other people. As we look at this, I'm going to take you back. One day I was sitting in a casino, and I'm still building my faith. I'm still building my courage in the market. I'm still learning, okay? I wasn't in the stock market originally. Most of my focus was doing rental properties. And so I'm out here buying these things here, man. These are some houses that I own. So look at these, these are houses, man. I own these. And we buy these one at a time. Me and my wife, we buy these one at a time. And as I do that, I begin to think, man, okay, I want to keep this rent money. I don't want to give it all away. And I could just save it. But here's what happens with money in the bank. It gets spent. Money doesn't just sit there, man. Well, you can create buckets and walls for yourself. And I'd be like, man, I need to learn about these dividend stocks. I could store it because dividend stocks offset inflation. This is fucking 101 of stocks. I learned this the first day, 20-something years ago. Stocks offset inflation. So people are like, oh, I don't understand why the stock market's up. Because of inflation, man. When inflation went up, you go to the store, everybody raised their prices. If everybody raised their prices, guess what? Their profits went up. Their gross revenues go up. Guess what? The dividends go up. Guess what? We raise rent. Guess what? You're going to pay more for a car. Duh. It's just going to keep happening. You're going to keep paying more. And housing prices are going to keep going up. And stock prices are going to keep going up with periodic moments of volatility where something disrupts it. It's usually a black swan event. It's not something people see. If you could see it, everyone would be fucking rich. And they're not. All the economists be rich, and they're all broke and work for the government, man, except for the few that went into private. I met one last, I won't get into all that. But so our edge is that we believe prices will go through sideways motion. We call either accumulation or distribution. Distribution meaning they're unloading shares until eventually there's no buyers and prices come down. Accumulation means that if someone sells, I buy, and we kind of keep it balanced enough where, we're not really pushing prices. All of a sudden, someone doesn't want to sell. Well, if I want to buy, I got to raise the price. When I raise the price, it takes the price up, and then we find a seller. Boom. Now on the chart, you'll see price moved. And that's what you see here. Like there was no sellers here. That's why price went up to where the next buyer was. Well, what if the next one's 50 cents higher? It goes 50 cents higher. And as this keeps going, they're like, this guy here's like, fuck you. I'm not giving you 353. I want at least 354. I'm not selling. Well, then the price has got to go up until eventually nobody's putting in buy orders. And if there's no buy orders, price will stop. And if, soon you'll get to this equilibrium of kind of equal, buyers. Maybe one day's up, one day's down, one day's up, one day's down. So maybe there's, there's equal orders, but, how far did price have to go to fill that order? And that's what's happening. It's not that there's more buyers than sellers. I mean, technically, there could be more buyers than sellers. If a seller sells 100 shares, there could be 10 buyers buying 20 shares each. And so technically, yes, there were more buyers than sellers. But what we're talking about really is a volume, a weight, or a number of shares. And as that guy wants to sell it, he clicks market. Well, the next price is higher and higher. And that's how you get price movements, or lower and lower. And that's how you get prices down. Okay. So as I began to watch when I was in a casino, the dealer was, and I was learning about this, and I didn't come up with the 4 stages of price movement. I learned it from a guy named Stan Weinstein, but Stan used it like on a weekly chart, on a weekly. And I thought, man, that's too far away. So that'd be a stage 1 for Dan. This would be a run up. Okay. Where's this? Like right here. So look, this is the TMF or bonds down here, stage 1. Okay. Anchor point right here. So in money flow language, the very bottom is an anchor and the very top is an apex. Pretty simple, right? And those usually show up after volatility's been heavy, and so it means RSI goes extreme. And then we get confirmation with price, meaning 3 or 4 price the next day bars, or be higher than that day, putting in what we call an anchor point. Okay, and we begin to create chart patterns. This is the organic movement of price, and I believe it kind of drifts sideways, and then it breaks out, and it could be news. It could be any catalyst that takes it up. It could be the wind. The whole market's going up. Well, fuck, all those ETFs have to buy stocks, and Walgreens could have done nothing new. It's just the market's going up. So everybody that is one of the Dow Jones industrial stocks. So when people buy their index only funds, they're buying some Walgreens. So Walgreens could have been doing shitty and get taken up with the general stock market. And that up movement, where price is on the other side of the green line to the left, we call that a stage 2. If you dig into my course, we can get into the really details of the moving averages and the alignment where price is to, pinpoint and get your entries, whether you're buying whole. If you're a dividend stock investor, learning this kind of stuff will greatly improve your returns because you'll be able to pinpoint and target and create a repeatable process of when to buy, when to take profits. And you'll see over time that you're selling into strength and you're buying weakness. I don't know any better way of doing it, man. And you're following the trend, okay? Now, I said I wouldn't go long today, so I'm going to keep this short. We are in Sunday service, by the way, okay? Sunday service. So we're just trying to build faith in this process. So this is what I believe the stock market will do. I believe it'll put in a stage 1, it'll break out and it'll run up, it'll put in a stage 3, it'll then start to go sideways. My indicators will tell me when to either stop, don't be a buyer for sure, to recognize you're probably hitting a high, which could alert you to what? Hey, let's save some cash. Let's get ready for this possible pullback. Doesn't mean you need to necessarily sell anything. Maybe you want to put on a hedge. It all depends on what your goals are, okay? It just is what it is. And maybe it's to do nothing, just to wait, or maybe it is, hey, I want to take some gains in a stock like Airbnb that we showed earlier, or an oil. So this is last week. I said stage 1, possible stage 2 breakout over here, right? Anchor point, we're over here. There's our breakout. Where's my target? Up here. Well, all this is, guys, is this. It was stage 1 over here. What? And then it runs up. And I'm waiting on a 3. What is. Newton's law of motion. What's in motion stays in motion. So if this goes into here and heads up, I don't go out and read articles and look for reasons that oil should come down. I don't give a fuck about that. It is what it is. Price is above the 5-day exponential moving average, which is above the 10, which is above the 20. The numerical alignment is price 5, 10, 20. That's as bullish as it gets. And then the oil stocks are breaking out. I mean, there's nothing to counter. And we got in on that right at the fucking bottom. And yet I didn't know that was the bottom. I knew that was a stage 1. And on stage 1s, I want to buy, invest, and trade stocks in a stage 1, indexes in a stage 1, sectors, right? Like right now, utilities. And so I'm scanning. I'm looking, can I take money off of these 3s, lock in gains? Do I have some stocks that are trading overvalue or fair value? Roll that shit to last week we talked about it, Exxon, Chevron, things that are moving up. That is not something you need help with. That you just need to understand value, okay? And then trade good stocks. I didn't say anything about penny stocks or any of that. We'll wrap up with this.
To me, actually, for many, many, many millions of dollars, both of them started with $2,500. By coincidence, it was the exact same amount. It was everything they had in the world. And one of them.
Hold on, Daddy Warren. And we're going to end with this. And today, I didn't get into all this stuff, man. I can't do it all. It takes hours and hours and hours for me to cover everything in here, okay? It really does. It takes lots and lots of hours, man, to cover everything inside of the money flow. If you have my course, Getting Started with Stock Charts, that'll be a big help to you. It's not the best audio and video production, but the content is priceless. It's exactly what I'm doing here. And the homework board will teach, and then it's all around this. It's all around faith. But 71% of the time, stocks go up. The problem is it's not a straight line. Price can only do one of 3 things: move up, move sideways, or move down. I believe price does this in 4 stages. And by identifying the stages, we can better allocate our buys to take advantage of sell-offs, stage 4 declines. And what other people fear is risk. We know is simply volatility, which is our opportunity, man.